Creamer Media's Mining Weekly is speaking to Neil Pretorius, the CEO of DRDGold, a company which for the 15th time has paid out dividends in uninterrupted fashion. Neil, so DRDGold has got the board go-ahead to generate its own clean power. Tell us about the cost it's going to be, the security, the percentage of total energy use, and the location as well, because you need quite a bit of ground.
So Martin, let me start at the last part of your question. So we do have plenty of land available around Ergo. In fact, DRDGold is probably one of the largest landowners in Johannesburg with north of 6,000 hectares. But there, right next to the plant, is more than sufficient land where we could build the plant, the solar panels, as well as the storage facility as well, which is modular in design. And we could link it up with the grid, link it up with the tailings facility as well as the plant, also feed back into the grid, hopefully to ultimately also draw power at some of the other operations, again, some of the units that go back into the grid. It's a project that's been 5 years in the making. So we were cautious to begin with in terms of the sort of technology that we wanted to invest in. The model wasn't entirely convincing initially, but I think we'd reached the stage now where both the volatility of supply, the quality of supply, and also the pricing of supply, those things have just escalated to a point where you simply you cannot wait any longer. The technology is also rapidly improved. The panels now compared to the panels 5 years ago, it's been a quantum improvement in terms of efficiency, et cetera, and quality, durability. We're on a high hail belt and so forth. So all of those were important considerations. So we're starting out initially with about roughly 1/3 of what the total project design envisages over a longer period of time. And we're setting it up in such a way that we're feeding back into the Eskom grid, not the municipal grid. This goes back into the Eskom grid. It's one of the reasons why there's also been a bit of a regulatory design, because we just could not get the municipality across the line. They wouldn't sign consents. They wouldn't budge. They literally stonewalled this thing. So we had to find a way to get straight back into Eskom and their grid. Hence the 88 kVA line that is going to go into the Eskom substation at the Brakpan tailings dam. So that's the first phase, and that enables us, because it goes directly into the Eskom grid, to then also ultimately take advantage of the units fed in and drawing those units, being credited for those units as some of the other operations. In terms of cost, we're still weighing up the option of do we do this off balance sheet by way of some sort of a power producer entity. The model is just so robust, though. The return on investment is just so robust from the saving aspect only. I mean, not even taking into account the fact that you will be reducing the disruption in power supply. That we're turning these numbers over in our heads, deciding how much of it should we be funding ourselves and how much of the upside do we really want to give away. But the first phase, that which is going to be happening in the near term, as soon as Eskom gives us the go-ahead to do the upgrading of the line, which we believe is imminent, that we'll do ourselves. The board's happy for us to do that ourselves. We're a company that we don't have any debt. We've got in excess of 2 billion rand in the bank. This is a project where we think green funding would be really well suited for this sort of thing, maybe some sort of a green bond or whatever, because of the nature and how it delivers into the ESG aspect as well, carbon reduction, et cetera. So, all of those details we would want to share with the market then once we've sealed them in, once we know that, they are what we think they are.
And how important is the storage aspect? Are you confident in the storage?
Yes, the storage is actually, that was something that we were going to do regardless as to whether we were going to do the panels, because we were going to charge these batteries off the Eskom grid during off-peak periods and then drawing during peak periods. So there was going to be that saving, and the model again, the cost of investing in storage and applying it in that way, just the saving of not having to pay that premium or that charge during peak period was going to be enough to justify the storage itself. So yes, no, that's even more compelling financially speaking or commercially than the panels themselves. But it's a good match. You want them both.
And what about green energy at Far West gold recoveries?
Yes. So Sibanye-Stillwater is also looking at various plants across their footprint. I'm not quite sure how much of that is in the public domain, but there we would be looking at a collaboration. Initially, until such time as it does come to fruition, we would want to draw surplus units fed back into the grid at Far West. Hence the reason why we want to tie into the Eskom grid. And that will be what we do until such time as we decide on a collaboration with Sibanye-Stillwater there as well. But we don't have any immediate plans to go solo in the Far West. Rather just take advantage of maybe surplus units being fed back into the grid at Ergo.
How green is DRDGold Valley, and what do you have in mind to make it even greener?
So, I suppose the point most often overlooked, and we probably don't emphasize it enough, is the fact that we don't generate any waste. So we produce a metal, we produce gold, but we don't produce waste in the process. In fact, what we do is take waste where it's become either inconvenient or where it poses a risk. We process it to a process which we believe is sustainable and value adding, and we then store it somewhere else in a facility that is being run at a different standard, and that does not pose the same risk or bring with it the same nuisance that the waste that we've removed that it poses. We recover it from. So I think that's one of the features that makes the company unique, is the fact that we do not add to the amount of mine waste on the surface of this planet. Secondly, I think the fact that we've been migrating consistently towards recycled water, and that we have a closed water circuit, that no water goes to waste other than through evaporation, and that everything is used and used again. And we can reach the furthest corners of our operation from our central water plant. The reduction in potable water usage has stood us in good stead also in terms of, let's call it our environmental value add or our environmental dividend. The burden that we're imposing in that regard on other users, and the fact that we're not competing to the extent that we were for potable water 10 years ago, I think that adds significantly to the environmental value proposition that we pursue. Our recycled water is also a lot cheaper than the water that you would get from Rand Refinery. And I think that's sort of the constant theme in many of these projects that we pursue. We really want to try and create an integrated value, if I may use the MBA term. We want to invest in power, not only because it's good for the environment, but also because it reduces our risk and it reduces our costs. We did the thing with the water, the development of our centralized water plant and the recycled water plant that we built at one of the sewage plants. We do that not only because we want to have a lighter footprint environmentally, but it also costs us less money and it de-risks the business, and so forth and so forth. So, sustainable development is a wonderful notion, and I'm a big disciple of one of the pioneers of sustainable development, Paul Pullman, and I've read some of his work quite extensively. I've studied it, and if you can achieve that, if you can bring about, let's call it multi-layered or overlapping value, where your investment in the one also impacts or adds to the value in the other capital stocks that form part of the sustainable development suite. I think that's really how you set your business up in terms of resilience and longevity, and that's really key to our thinking. That's really what we want to try and achieve as a corporation.
That was Creamer Media's Mining Weekly, speaking to Neil Pretorius, the CEO of DRDGold.